Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is the Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover a topic which is technical analysis on USD INR, which is United States dollar to Indian rupee. As you very well understand that markets are getting very volatile, and especially in INR, and especially when we have the new governor in place, Mr. Urjit Patel. And we also very well understand that immediately after the governor, this person reduced the repo rate by approximately repo rate by 25 basis point to 6.25%, which effectively suggests that he also given the tone that he is interested enough to reduce the rate even by 50 basis point in the near term, or probably in the next meeting, which clearly suggests that INR is moving towards reverse carry. Now, what do you mean by carry and reverse carry? That would be covering in the later part of the video. But if you look at the chart, which is right up front you, then you will get a very stark relationship in the chart. Now, if you look at the chart, you will get to know a very confusing signal in the chart. Now, what are the confusing signals which you are giving? First of all, this is a USD INR chart for 1 year. So we are deliberately taking this chart for 1 year. Let me click again to make it to 1 year. So we are making this chart to 1 year, right? Now in this chart, if you see, you will see a lot of volatility in the USD INR. Now this volatility in USD INR is of course, INR is a volatile pair, and there are a lot of people who still tend to believe that Indian economy is there is nothing is going to be happen to Indian economy. There is a movement across the globe, or Indian economy is devoid of the movements versus the movements across the globe. But I never tend to agree with this fact, to be very honest. We strongly believe that in Indian economy is continuously in sync with what global economy do have right now. And in that regards, if you carefully see it, you will see a huge volatility in the INR market. If you currently see that INR is trading at roughly 66.80. INR is trading at roughly 66.80. Here you will see INR is trading at 66.80. And in this, what we did and it is heading towards 67. It is a separate fact that Reserve Bank of India governor has reduced the repo rate by 100 basis point, by 25 basis point. This will surely bring Indian rupee. This would surely bring Indian rupee to a reverse carry. Now, what do you mean by carry and reverse carry? Let me elaborate to you. Now, carry and reverse carry means that if sitting today, we all know that approximately $13.5 trillion of funds across the globe are having negative interest rate policy. Now, this negative interest rate policy is forcing people to come to those places where they are able to make a good amount of money. Now, what exactly you do in this? You will invest in the countries which are offering you highest return. In that regards, Australian 10 years, which is 2.08%. You have Canadians, you have United States 10 year 1.75%, Indian 10 year in INR terms 6.88%. So there are few places where you will get a good carry. So what exactly you will do in this? What exactly you are going to do in this case? You will go and invest in these countries. Unfortunately, sometimes the central banks of these countries continue to follow accommodative monetary policy. Now, what do you mean by accommodative monetary policy? Accommodative monetary policy means a monetary policy wherein you believe that if you cut the interest rate, you are able to stimulate the economy. Unfortunately, majority of the time, best economies across the globe, they said no to it, and in fact our personal view is also that by cutting the interest rate you cannot stimulate the economy, but nonetheless. So what had happened that now there would be less flow in INR, because if I was a trader, if I am a carry investor, when I used to invest few years ago, I used to get 8.75%. Now today I am getting 8.75% on 10-year yield, and now I am getting 6.6 to 6.7% on 10-year. it means approximately straight loss of 200 basis point to that carry investor, and that too in INR term. You need to convert this INR into dollar and the figures would surely be changed. Why shouldn't you go in Australia and invest the 10 year which is offering me 2.04%? Technically, this is known as the people who are who are known as the yield hawks. They are the one who continue to looking at the yield and so on and so forth. So for me, it is always the best opinion to go in these markets and fetch more interest. If this would happen, there would be less flow in India, and of course it should be, because if I am a carry investor, I love to go in Australia and invest than coming to India, because here I am getting less money. But the impact of this will come at a later point of time. Like yesterday, I was reading a newspaper and I got to know that Indian foreign exchange reserves is approximately I think $336 billion, with the forex liability with approximately I think $500 billion. So the difference, FX reserve minus FX liability, which is net international investment position, which is approximately 180 to 200 billion dollars. So India to pay, then to receive. So what did happen? And if we continue to decrease the rate and continue to follow the accommodative monetary policy, then one thing which is strongly sure, that people will lose people will stop investing in the country, because they tend to believe that what is the point if we getting the higher return somewhere else, why I should invest in that country, right? So and if we now in this chart we are trying to prove this. The first we did is the Bollinger Bands. In the Bollinger Bands, now let us show you now Bollinger Band, this is the mean average. What you can see here, this is the mean average, the inner line which you see in the red, the above two, which is the higher side and the lower side, these are the mean average plus minus 2 standard deviation. You can change to 1 standard deviation also, but if you change to 1 standard deviation, then things might not work. What I do, I will change here, I will change here source close to high, and here I change standard deviation to 1, and here I do offset. His offset is say 0. I'll say okay. You get to know, you will clearly get to know that now the Bollinger Bands is not showing their pattern. So the mean is on the higher side of the curve. So it means that there is a movement of plus minus 2 standard deviation when it comes to the USD INR movement of the last 1 year. Now I'm going to change this again. Now I will go to these settings and I will click this to 2. Let me take 2.5 precisely, and I will say okay. Now you will get to know that the Bollinger Bands is sufficiently able to cover everything. Now with Bollinger Bands, what we did, we also if you go look it down, we also made RSI, which is relative strength index. Now relative strength index means once you are above 70, then you need to sell. Once you are below 30, then you need to buy. What I do, I have a little conflict here. So in RSI, I will change this 70-30. What I do, I will change this close to, take it close. Now take it close high, take it close high. Here take it on 20 days, right? And here you should take it on, upper band should be red and lower band should be yellow, and background you can give this, we'll say, and here you will give red, here you will give okay. Now you can very well see You can see that if we take it on the high side of the USD INR chart, then you will get to know that this is current sitting today. The relative strength index is not even 70. So if you come here, which is here, currently the relative strength index for USD INR is trading approximately 14.3, which means no selling and no buying. But we should not forget that relative strength index. We should not forget that it is going up. So you might have a sell call, but not now. So the purpose of this video is to give you an introduction of how USD INR is trading, and currently this is trading at 66 point. It is trading at 66.80. And the advice which we would like to give to the traders or traders across the globe is that if you are having INR exposure, dollar exposure, and your cost is in INR, then we request you to have different kind of derivative instruments in place. If you clearly look at this chart, then you will make a sense that INR is heading towards up, but yes, we also strongly believe that INR is heading towards 67.25, and from 67.25 we need to take a call how it would move. But at the same time, the thing is like that, at the same time, the traders are advised not to buy and not to sell, because currently INR is neither buy category nor a selling category. This is something which we need to understand, that today INR is neither a buying category neither a selling category. I think that selling will come approximately 67.25 would be a selling kind, and buying would be, I think, 66.40 or 66.45 would be a buying. So 66.45 would be a buying, and 67.25 would be a selling. So this was the introduction about USD INR chart, which we taken from our financial terminal. We would like to thank you very much for your time, and our contacts at which is strategyconsulting@gmail.com and Rahul Magan 8@gmail.com. Over the period, we bring you a lot of technical analysis, and now we are planning to enter into a new segment on our YouTube channel, which is Basel 3. So the next week, which is starting Monday, right, 4 days from now, we would bring to you several technical and new things about the Basel 3. With this, we would like to thank you very much, and this is 199th video of the YouTube channel, and we are extremely pleased that with your support and cooperation, we crossed 200 videos on YouTube, which is a benchmark, and we're planning to have 250 videos by, I would say, December, and approximately 600 videos by December 2017. Thank you, and have a great time ahead.